Hi guys, welcome to SavvyMoneyShow. Me, your host Sean. I apologise about any background noise. I'm still on holiday in Venice. Now, today is our high risk, high reward place. It's a bit of a choppy day here today, so the sea's a little bit noisy, but we'll try and get into it. If you're a member of my Discord, you will already have been notified. Upwork. Now, we've played this a few times as a couple of short-term trades in our Discord. Now, they've done some cost cutting, which has worked for them. If the free cash flow continues on this track, they'll end up with 9 times. I apologise about the spelling mistake. I'll correct that. 9 times free cash flow, and I believe it could be a good opportunity. They have 500 million cash and investments on their balance sheet and 300 million debt. Their average revenue growth over the last 5 years is 22%. The EBITDA margin has doubled to 21%. But there are risks that the platform needs addressing. They have fake profiles and cookies, and there's freelancer issues, and of course competition issues. There's talk about how how AI could affect it. Of course, AI could go either way. It could, let's go along the pier, shall we? AI could either help it or damage it, but we won't know until they start implementing it and how well they do it. But their partnership with OpenAI has apparently strengthened, so I'm in the camp of it helping it. I believe right now that the risk is worth the reward when you look at the price it's at the moment. This is a stock that just went to the moon during lockdown, during the pandemic, and see that I don't think it's going to go there again, but I do think it will have steady growth. If it continues on the path that the CEO and board expect to, then it will, I can easily see conservative 12.5% growth year over year. Now, going to the next one, which is IBM. It's not as risky, but the reward won't be as much. I believe, looking at the free cash flow, it's 16% undervalued, and it gives a 6.68% dividend, which you just missed. There's a forward PE of 19, which of course is underneath the market. So 180 billion market cap versus enterprise value of 220 billion. Price to sales are under 3. They have plans to shut down 2 R&D business lines in China and move the offices. I'm hoping that they're going to announce some kind of cost cutting here, and start to pay off some of their debt. They have 133 billion total assets versus total liabilities at 108 billion. This is around about the amount that they have had for most of their lifeline. They've kept this gap of liabilities versus assets for quite a while, and so the liabilities to assets are not worrying me. They like to keep this kind of cushion. And the thing about IBM is they do a lot of services and they do charge a lot for what they do. I have a lot of big corporation contracts, and they do charge a lot for the simplest things. Big company I worked for a long time ago, they just wanted one thing moved from one corner of a room to another one, and they were going to charge thousands of pounds for that. You know, it's and they do hold a lot of patents. So I do think that I wouldn't bet against them surviving. I think this is one of those that you buy and hold for the dividend, which will give you a fairly good return, better than the bank will, and you also may get some stock price appreciation as well. But I would like to know what you guys are looking at. What are you guys buying? There is one more company that I'm buying that I alerted you to before, MGX, and it's a biotech AI stock, and I did a video about this before. You might want to go back and see that. It uses AI technology to help with a crisper landscape, and I believe it's trading at the moment at 50% below its cash value. Now, when a company that is not being touted on YouTube and all the other channels and TikTok and that is trading so far below cash values, especially an AI one, that's one I like to look at. You know, I like biotech stocks, you know, I like AI stocks, but I'm not going to get into the bubble. This is one that I think once people take notice of it, it will just start skyrocketing, like the stocks did in pandemic, purely because so undervalued. The thing about biotech stocks is there's a couple of metrics you have to look for. First one, the data, and the second one is cash burn. Because if they don't have enough cash to carry on operations, they either have to dilute shares or bring on a partner or sell off the whole thing, or wrap up the business, or they declare bankruptcy, like any other company, no matter how good the data is. Now, if there's any stocks you guys want me to look at, let me know. Just because I'm on holiday doesn't mean you guys don't get me to look through a company's fundamentals for you. I'll see you in the next video. Don't forget to hit the like button, comment in the box below, and subscribe if you haven't. And I'll see you later on. Oh, and thank you for everyone who bought me a coffee via the Buy Me a Coffee app. It's much appreciated.
We're not doing it today. Bye.